Then, last of all, the pre-exam preparation, what to do if you're going to hit a panic button. Maybe that's not the right phrase to use. But throughout the presentation, I will be taking a 10-minute break where you can disappear off for a cup of coffee, outside, fresh air, whatever you wish to do. And we're doing that 10 minutes in about every hour or so. Okay, I'm just going to now disconnect the video. Okay, so that's now disappeared. And let's make a start. Looking at the mock exam itself, I sincerely hope that you enjoyed this particular exam. That's the answers. Right, let me just bring up. This should be the questions. Excellent. So this is the second mock. Okay, this is mock 2. Fine. The first thing to deal with, to consider in terms of the mock, is that you will have had a 3-hour exam with 15 minutes of reading and planning time. You should be familiar with that by now. This is the end result, the final hurdle for you to become fully fledged qualified associates. So you're familiar with the 15 minutes reading and planning time. However, every exam, there's a slightly different variation in terms of what you can do with that 15 minutes. As I said, this is, we refer to this as a reading and planning time. And my approach to that is, because you are dealing with Section A, you've got 2 questions in Section A, and you've got 2 questions to answer from Section B, but the majority of the marks, the major marks, come in Section A, which of course you should be totally familiar with now. Question 1 is 35 marks. Question 2 is going to be 25 marks. So that's giving you 60 marks in total. So my advice in terms of reading and planning time is that you're going to concentrate on Section A, and from Section A, you will concentrate on Question 1, because that's going to give you the maximum marks. And quite often, Question 1 contains quite a bit of detail that's going to need you to work through. It may, for example, deal with analytical review in the planning sense, so you will have to concentrate on calculating some analytical review ratios. So, using that 15 minutes reading and planning time, perhaps a quick read through the requirements, just get a general feel of all of the questions, Section A and Section B, no more than a minute or 2. Then back into Section A, concentrate on Question 1 in terms of understanding the requirements, reading and dealing with what is necessary. If you are required to do some ratio analysis calculations, for example, then I would start doing those ratios, those calculations. You can write down on the exam paper itself, and then when you come to the time to start your answer in the answer booklet, you can transfer those ratios onto the first page, head up that page as being an appendix, Appendix 1, and finish off. You can then start your report, your briefing notes, your memorandum, whatever the requirement is, on the second page. And as part of those memorandums, briefing notes, you would refer to the ratios calculated in Appendix 1. That's not something that came up in terms of Indigo, the question in your mock exam, but it's a very useful approach in the sense that this is a P7 paper, it's professional, therefore you will be expected to use appendices, etc. In that case, as I've said, do the work on the appendices, put them on the first page, and then continue on the rest of it on the second page. That will be perfectly acceptable to the marker. Okay, so that's going to be the type of thing that you would expect to do in terms of the RAT for paper P7. Maximize the marks. So let's move straight in terms of dealing with the section A, question 1. Typically, section A, then you are going to be looking at a planning element in section 1. Now, the planning could be on an audit, it could be a group situation, it may be an assurance, non-audit type of situation. But usually, it's going to be around planning, it's going to be around dealing with logistics, it's going to be around perhaps dealing with the scope of the audit, it's going to be around materiality perhaps. Unlikely to calculate materiality, but you may be asked to identify materiality, what is going to cause such problems. It could be on audit risk, inherent risk, control risk, and detection risk. It could be on business risk. That's looking at it from the client's perspective, not the auditor's perspective, of course. And it may well be on the risk of material misstatement, which is often referred to as financial statement risk. One point to bring out on this is that read the requirements very, very carefully. That's because many candidates confuse audit risk with business risk. Perhaps those of you, if you are an auditor, you are familiar with a business risk approach, and therefore you tend to get confused between audit risk and business risk. You answer the question from a business risk, you answer it from the prospect of TARA, transfer, avoid, reduce, accept, etc. And you're likely to get very few marks. You will be using the business risk approach, but that is going to be identifying areas where there's the potential for material errors within the financial statement through understanding the nature of the business, its environment, and its controls. ISA 315. So be very careful in terms of how you do that. The best way of fully understanding the type of questions, of course, that will come up in question 1, section A, is simple. Work through as many of these past questions as possible. Now, you may well be familiar with scenario, because the key point here is briefing notes. It may well be a planning memorandum that you will have to do. Just read what is required. Then tie in with that, as always, that there will be 4 marks available for the presentation, logical flow, clarity of your explanations of the briefing notes. What that basically means is don't throw those 4 marks away. Here we're dealing with briefing notes, so you would expect to have some kind of heading that's going to be involved. So let me just go to my whiteboard. And if we are looking at briefing notes, then it's indigo. Then you want the briefing notes. Put in what the year end is. Put in that this is for an audit planning meeting. I'm cutting this down as I'm going through it, but do a neat heading. You're going to get the marks. That's going to be important. Then there will be a brief intro. So, for example, as requested in your email, I have prepared these notes for our planning meeting in the order of your requirements. I've looked at the permanent file, the correspondence. I have taken into account the detail you have given within your email. Then a wrap-up element. If there are any questions you wish to raise, please inform me as soon as possible. And then sign off, as in terms of the fact that it's an audit manager. You are the audit manager. Now that's going to be important. Look at what is required, because then when you come down to the body of your notes, the requirement will be requirement A, requirement B, requirement C, etc. So looking at requirement A was dealing with the opening balances. Requirement B was looking at the financial statements risk. Okay, so nice, neat heading. By all means, use capitals. By all means, underline the headings. Make it perfectly clear within the memorandum where the detail is. This is a professional letter. Don't write a letter. For some unknown reason, candidates automatically fall into the trap of writing letters for everything. Make it nice, neat, tidy as your handwriting will allow, of course. But put the appropriate headings in. Use the requirements from the email for the guidance and how you do this. As we will discuss later, it can be extremely easy in terms of failing this exam. It is the tough exam. Pass rates for this exam often hit the low 30s for whatever particular reason. We'll deal with those reasons in a few minutes' time. Okay, let's go back to the mock. Right, so we know what we're doing. Briefing notes as requested. Presentation, logical flow, and clarity. Get those 4 professional marks. Right. Then we can see what we are dealing with. Take a set of highlight pens in with you and highlight the exam paper as we are going through. Right. We are dealing with a company called Sandy & Co. Iron and Steel, to give you an idea of the nature of the business that we are dealing with. Nothing too exciting, standard industrial element. We were appointed as auditor to Indigo, the Iron and Steel Corporation, in March 2015. The year end is June 2015. Okay, we've identified you as being the audit manager. That will mean that you make decisions. That's a key point with P7. You're in a senior position. You may be the audit manager, you may be the audit partner. If you're the manager, you are expected to make decisions. Tell the partner your views on what should be happening. Don't ask the partner the questions. Don't duck your responsibility. We'll be looking at some of the typical things that candidates go crazy on with P7 later on in the follow-up debriefing. Okay. If it's the year end 30th June 2015, then that date has not yet been reached. P7 is real time. So in your exam in a couple of weeks' time, and with this one you're taking now, that is likely to mean that the inventory count will not have occurred yet. If a year end was April, and you're doing planning now, or you're doing work now, then the inventory count has happened, and the you will be planning for the final audit. So look out for the timing. Okay. We've got the detail in terms of the memorandum from the partner. Have a quick look at what the requirements are going to be. Describe principle. Okay, what does principle mean? It means main audit procedures. Don't write out an audit program. That would not be required looking at this. Principle means main, and look at the marks. You've got 6 marks. So that basically means 6 points, maybe 4 points of 1.5, but go with the flames. 6 good descriptions. That's going to get you the pass mark. But here we are dealing with the opening balances. Again, it's dealing with the 30th of June 2015, and that should tie in with the fact that you have been appointed auditor just before the year end. You have just been appointed the auditor. Remember that from the previous detail. Let me just widen this up a little bit. Okay. Using information provided. State the risks of material misstatement using information provided. That basically means look at what you've got in relation to the detail. So we need to state the principal risks of the risk of material misstatement and justify an appropriate audit approach. Again, confirming that we're dealing with the year end of 30th June 2015. So we've got 15 marks. Maybe you seem it's an odd number of marks, but it's going to give you a very good idea of what exactly it is that you are dealing with. So we need to identify the risk of misstatement. That will give us half the marks. Justify an appropriate audit approach. That will get you the rest of the marks. If you just state the risks but do not give any indication of an appropriate audit approach, of how the audit work you're going to do, the tests you're going to carry out, you will not get a pass mark. So for 15 marks there, you're looking at potentially 7 or 8 good points to come up in terms of dealing with the principle, sorry, in terms of dealing with identifying the risks of material misstatement. Part C, briefly discuss responsibility for the detection of fraud and error on the client. You have 4 marks. Briefly means exactly that. You're not going to write half a booklet on this. Okay, so stay with that. 4 marks. Responsibility, our responsibility, the auditor's responsibility. Don't get too much into responsibility in relation to the directors. Okay, it's looking for the auditor's responsibility. And then part D, comments on the matters to be considered in seeking to determine the extent of the financial loss resulting from the alleged fraud. So, matters in seeking to determine the extent. Right, so that's moving into a little touch of forensic auditing. So here the examiner is giving you a approach, or I, as the examiner, was giving you the approach on this question of the risk of financial statement error, misstatement, and then moving into forensic, not unusual. Now, one point to note here, part A talks about principal audit procedures. This is a very common element in question 1. You will be asked to list and detail the principal audit procedures for a particular element. This is dealing with opening balances, but it could be dealing with any IFRS element. You might be lucky and have to deal with IFRS 2, or perhaps IAS 19. I say lucky, maybe not so lucky, depends on your thought processes. Sometimes it can be relatively straightforward. Sometimes it can just deal with a non-current asset. Other times it can be quite a bit difficult. It might deal with financial instruments. But this is the planning question. Later on, we'll come across questions that deal with the review aspect. Here, we're just interested in the planning. So the principal audit procedures to be carried out. Okay, what you should be doing now is to look through the question. We know what the requirements are, so it's now going to be a case of going through questions, going through the detail that we have. Right, what do we note? They counted an inventory early and they were going to roll forward. So in this instance, if there was an unexpected inventory count, they did it on the 31st of May. You were informed that they were planning to count the inventory at the year end. That is telling you that you did not attend the physical inventory observation. If you did not attend the physical observation, then that is implying a financial statement risk. So that element is relating to requirement A within your briefing notes. Sorry, requirement B. So note that as requirement B. During the tour, the partner saw that aluminium was strewn across the fields after a storm. Much of the quantity of iron is rusty. Piles of copper and brass that can be distinguished with a simple acid test have been mixed up. So again, here, that is implying a financial statement risk, because there could well be problems with the valuation of inventory and dealing with net realizable value of the inventory. Now, this was quite interesting because in the past, what do we mean by a simple acid test? What we mean by that is, as we're dealing with copper and brass, then sulfuric acid, for example, would be a different color if you put a couple of drops on copper and you put a couple of drops on brass. This question is actually based on a past examination question, and what happened was that far too many students decided that this was an acid test relating to financial ratios, quick ratio, current ratio, and started talking about the current ratio. How that ties in with piles of copper and brass, the previous examiner just did not and could not understand. Read carefully. Count sheets show that on average, metal quantities have increased by 1/3, although the quantity of aluminium is reported to be 3 times as much. So what particular problems are we encountering there? Well, that may tie down with other information in a moment, but it looks like they are holding far too much inventory. So why are they holding that high level? Does this mean that we're going to have a net realizable value problem? There is no suitably qualified expert to value inventory in the region, so that is in telling you that in relation to the work to be carried out, then there's going to be the need for an expert. We need to bring in the appropriate expert. Just been informed that the chief accountant has disappeared, taking the cash book and 3 days' sales with him. The cash book was last posted to the general ledger as at the 30th of April. So that is also indicating to you that there's a risk of material misstatement, because if the chief accountant has... Please can you prepare briefing notes for a planning meeting? Okay, that just reiterates what we have dealt with. What other information do we have? Well, we have details of the office buildings or workshops of substantial stock on land that was leased. Day-to-day operations are managed by the chief accountant. So the chief accountant has now disappeared. So if he disappeared at the end of April, then what happened during May and June? Iron and steel are at scrap prices, high volume. A weighbridge weighs the trucks and vans and scrap metals. So in terms of that weighbridge, there's going to be potential problems. For example, if the weighbridge is not accurate. So this could well be just straightforward. For example, looking at F8, that you would need to check that the weighbridge has been appropriately calibrated. How accurate is that weighbridge? Furnaces melt down the scrap into blocks and stored in the workshop, sold on both credit and cash terms. The furnaces are now 10 years old and have an estimated useful life of 15 years. The furnace linings are replaced every 4 years. So what is that telling you? That is telling you that you are dealing with separate assets, and therefore you would have to recognize and de-recognize the furnace linings. An annual provision is made for 25% of the estimated cost of the next relining. Annual provision. Okay, so looks like we've got a financial statement error here, because those linings should be capitalized on initiation and then depreciated over the 4 years under IAS 16. So let's just bring in IAS 16, should be dealing with. So that's a potential financial statement risk. A byproduct of the operation is clinker. Most of this is sold for cash, for road servicing, but some is illegally dumped. If it's sold for cash, then what's going to control that cash? So again, we are looking here at the financial statements problem in relation to revenue going missing. And the key word here is illegally dumped. So in that case, we have laws and regulations to deal with. If it's being illegally dumped, what's going to be? Well, there will be a risk at some stage. There may be various fines placed on the business. It may lead at some stage in the future to the business being shut down, but don't immediately leap on that. Don't immediately think about going concern. It says some is illegally dumped, and that is more than likely going to relate to provisions for potential fines. Indigo's operations are subsidized by a local authority, as the existence of the corporation means that there's less dumping of metal items and recycling is encouraged. Indigo receives a subsidy calculated at 15% of the market value of the metals, as declared in a quarterly return. So what's going to be the particular risk there? That quarterly return may be overstated. So that should pick up on an overstatement problem, because if the purchases are overstated, then the subsidy will be 15% more in relation to what has been overstated. Then we've got the return for the quarter to the 30th of June will fall due to be submitted on the 21st of July. So in that case, you are looking at income. You are looking at accrued income. Indigo maintains manual inventory records. Manual inventory records could indicate a higher risk in terms of the potential recording. The auditor's report on the financial statements was, for the 30th of June, was unmodified. Okay. The last paragraph here you have just received, if that was in your exam, well, okay, that does actually relate to the element that has been made up here. Okay, so that's just gone through the detail, reasonably straightforward, nothing exciting in terms of sometimes the examiner may ask you for things that she's not given you. Other matters sometimes comes up, for example. And I've already mentioned that sometimes you may well have to analyze out the ratios and identify the potential risk from those ratios, the audit risk from those ratios. So let's just go back to the whiteboard. And with that detail, let's move this up. We knew that Part A said the audit procedures to be carried out in part of opening balances. Some quick points in terms of your planning ideas, and we discussed this in a few, or we'll discuss this later when we look at preparing you for the real exam. How many of you did a plan? The markers do expect to see some kind of plan. So here we're dealing with opening balances. Remember, you were not the auditor. So straight away, you may well want to review the prior year working papers. Shorthand here because this is a plan, rough guideline, rough outline. Do it as you can understand it yourself. The marker's not going to mark your plan, but they will expect to see a plan. If there's no plan and you are borderline, you may well get 49%, you may well fail. So, could we review the previous working papers? This may relate to company law, this may relate to common practice. It may be that you will not be able to review the working papers. Explain that particular point. The client. So the client will have information. So if the accounting policies are consistent across, they haven't changed in the course of the year, then that can give us some reasonable assurance about opening balance. And maybe the rest of this, in terms of picking up some good marks here, this is 6 marks, will be F8 elements. What do we have? Think about what we have. We'll have non-current assets. If we're dealing with non-current assets, then think about the current year. Work backwards. Look at the order work this year for the additions, for the sales, disposals, standard audit work for the year-end existence, work backwards, that can deal with that one. Inventory. Okay, in terms of the inventory, that's going to be the difficult one because You've done the closing balance, but you were not auditors for the opening balance. Therefore, the particular problem is going to be on existence. In terms of valuation, you'll have the documentation of the client, and you can reassess the valuation. If you're able to review the prior year working papers, then you may well be able to satisfy yourself about the physical observation procedures, and also give you an indication of any particular problems that there were in the previous year. Unlikely that there will be another storm, but you may never know that one. However, if there is doubt about the existence, you're not able to review the prior year working papers, then that could well be a situation on your audit report. You may well have to modify your audit report on the basis that you were unable, that you did not attend the last year's physical observation, and there are no other means to satisfy yourself about the existence of the inventory. Okay, what about receivables? If we're looking at receivables, then think about after-date receipts. Review after-date receipts and roll it back. If we're dealing with payables, then again, think about what's been paid after-date payments, i.e. that is in July 2014 and onwards, and roll backwards. You can look at cash. Fine. Look at the prior year bank reconciliation. Check that that was done. Check all the clearance items of what has gone through. Okay, unpresented checks, outstanding lodgements. What you would not suggest is to get a bank letter relating to the closing balance last year. That should be on file if you review the file, if you can see the prior year's working paper filed from the prior year auditor. Okay, and if you're going to do this year's audit, of course you are, then you will carry out a full bank reconciliation for the current year, and you can reconcile it back. That's going to be more than enough to get you those 6 marks. As this is P7, you may also think about analytical review. So in terms of analytical review, for the year on a month from the June 2014, then you could be looking at obsolete inventory, slow moving, inventory turnover, the collection period, the payment period, and the gross profit percentage. With that, it should be more than enough. All right, let's just quickly then brainstorm some of the ideas of Part B, where we're dealing with the financial statement risks. We've already gone through the detail, and we've highlighted and picked up. So picked up some of the problems. So in terms of the first risk is we're looking at inventory. We could have problems with inventory. There's a high volume of metals, so that's telling you that it's going to be material. The metals are valuable. How easy is it going to be that with the blowing of the metal all over the factory and all over the field, that some of that inventory has been stolen. We picked up about the subsidy. So there may well be an incentive to overstate purchases. And looking at double entry on that one, that may well mean that the inventory would have to be overstated as well. There appears to have been some problems that you did not attend the physical inventory count. So what about the physical controls in terms of tying the metal down, pinning the metal down, stopping it blowing away? That's given some indication of a problem. Scrap metal. For the word scrap, read what's going to be the net realizable value. Indication from the scenario was that some of the iron is rusty. However, open iron in the rain is going to get rust. So I wouldn't get too excited about that. But what did the examiner tell you about the increase? Let's just have a quick look back to the mocks. Where does it say about the increase in the materials? Excuse me, I'm trying to find this. It's much easier to work on this in terms of a sheet. But anyway, it does tell you there that aluminium, for example, has increased. Right, here we go, it's there. I found it now. Metal quantities have increased by 1/3, 3 times as high. Okay, that's the reported. You did not attend the physical observation, so how do you know that that is going to be possible? Is it possible that the client is going to perform a physical observation again at the end of the year? If not, then you need to consider the impact of overstatement and the impact on your auditor's report. We picked up in terms of the non-current assets. We said that already. In terms of the furnaces that require replacement, we picked up about under-recording, understatement of sales, and the potential misappropriation of cash. Unrecorded cash sales, we picked up on that during the review. The subsidy. There's a risk that purchases, sales are going to be overstated in order to inflate that requirement on the subsidy. Therefore, careful work is going to have to be carried out in relation to the return that is being made. Then the cash from the end of April. And the fact that the financial controller disappeared. So that's going to be a substantial risk in terms of material misstatements occurring. Bring that particular problem in. So those are looking at the risks. What will be the appropriate audit approach? If we're looking at an audit approach, it may well be because of the circumstances that you might say that some audit approaches are not. Well, first of all, it's high risk. We've got high inherent risk, we've got high control risk, it's a brand new audit, there's the likelihood of material misstatements, so the concentration will be on inventory purchases income and, for example, any particular other liabilities. We're going to need to see if the client is going to give a full physical inventory count at the end of 2015, June 2015. We would want to verify cash at bank reconciliation very carefully, and we want to confirm the accuracy of the returns to the local authority. If the client is not prepared to have a full physical inventory count at the 30th of June, then we would consider the impact on our audit approach. So you need to pick up for each of the items that we have mentioned in terms of the risk of a financial statement error, and approach it from a high inherent, high control risk element. Therefore, that is going to mean an increase in the detail of your substantive review or substantive work procedures, should I say. Part C, responsibility of fraud. Can't really get too excited in terms of dealing with that. You should know that. That's basically bookwork. I think we're dealing with, what, 4 marks for that one. Discuss the responsibility for the detection of fraud at the client. Auditors need to get a reasonable assurance that the financial statements are free from material error, whether caused by fraud or error. Auditors need to specifically consider the risk of fraud during the planning and tailor their audit procedures accordingly. So you're looking at the susceptibility of the entity's financial statements to material misstatement because of fraud. Detailing that will get you the sufficient marks. Notice here it's talking about the responsibility. The responsibility is to obtain reasonable assurance, but that's not going to get you 2 or 3 marks. You then need to expand out on what the audit procedures would be. To gain the maximum marks, you would probably also bring in the fact that the auditors are unlikely to detect all fraud because of the involvement of directors. Part D, the alleged fraud. So here I said that we were dealing with more of a forensic approach to the fraud. What exactly would you do if you are going to have to identify what the factors are for that fraud. Okay, first of all, have we reported to the police? Has that been dealt with? If it has been dealt with to the police, then we will want to look at the police report. What are we dealing with in terms of the loss? Well, that's going to be the sales for the 3 days before the finance guy disappeared. What about the cash bankings? Analyze the cash bankings around the period. If the director, if the chief accountant has been misappropriating cash, has there been any detail? So looking at an analytical review approach to try and identify when the particular misapplication of the cash started. What about insurance cover? Whenever you are dealing with anything on these type of questions of damage to inventory, damage to non-current assets, always pick up and think about the insurance cover. What, if any, is actually going to be recovered from the insurance? Look at the insurance terms and conditions to understand exactly what has perhaps been stolen. And lastly, are we actually going to get the money back? Can we recover? So with a forensic approach, it is trying to identify how the fraud had been carried out, using analytical review, looking at the books and the records, trying to identify how much cash has potentially been stolen and whether or not that cash can be recovered. Okay, that's all I want to say in terms of just a general overall approach and some ideas relating to question 1. It could be looking at quality review, quality control review. Look at the typical type of questions that have come up in question 2 through working as many past exam questions as possible. Right, usually short, so let's go and look straight away in terms of what's been required. Draft inner reports, initial findings and their effects. So notice we have the and to come in there. On the structure of the office, of the offer that the company might make to the shareholders of Top Drawer. Investigation, offer, Top Drawer. That should tell you that this is dealing with a due diligence. And then describe the other factors that they should consider before reaching a decision. So we're looking at briefing notes. So again, presented in a format of a briefing note, but this is now due diligence. You may have been surprised to actually be faced with a due diligence question as a compulsory question in Section A. I make no apologies for that whatsoever, because certainly candidates who had previously taken this about 3 exam sessions ago would have been absolutely delighted, because that's exactly what happened. There was a due diligence style question in as question 2, and it created a lot of complaints from the students. But it's fair because it's other forms of assurance. There could be prospective financial information here. There could be the audit for cash flows could be here. There could be an element relating to forensic auditing here. So why not due diligence? Just because it came up in the past as an optional Section B question does not mean it's not going to appear in Section A. Excuse me one moment, my voice is getting a little bit dry. Okay, that makes it a little bit better. Bear in mind what a due diligence is. What do we mean by due diligence? Typically, you might be expected to give advantages and disadvantages of due diligence. You may also be asked a typical P7 question about the factors that you would consider in accepting an appointment. That's fairly typical for 5 or 6 marks. Detail the factors to consider in terms of accepting the appointment, and then moving into the due diligence element. There's even been questions now appearing on report formats in relation to non-audit assignments. So work your way through past exam questions and be fully prepared. Let's have a look at the detail that we have on the basis that you understand what a due diligence is. And remember that the requirement of due diligence is to report your findings and the impact of your findings on the structure of the offer that the company might make to the shareholders. Let's just go back to that. That's important. Just wait for it to come up on your screen. It's a bit late in coming up on mine, but that's going to be important. You must fully understand exactly what the requirement is. Keep that in mind. Everything that you come up with in planning and looking through this, that you can identify the impact on the structure of the offer. So that offer may well be a cash offer. It may well be cash plus other considerations. But what's going to impact the fair value elements? But you should always remember that with due diligence, it's the other off-balance sheet items that are also going to be important. The off-balance sheet items, you could be dealing with the human resource basis. You could be dealing with customer basis. You could be dealing with staff basis. What impacts could those have on the offer price? That's simple. Again, work through as many of these past questions as you can from your particular question banks from past exams to fully understand the range that due diligence can deal with. Okay, so let's have a look what we have. You're a senior manager. Okay, you can make decisions. Long-standing audit client, jet spray. Long-standing audit client, this is not an audit, it's a due diligence, but it does tell you that you have a good understanding of what the client is about. It deals with high-speed jet boats, racing boats, for example, and it's a small shipyard. Okay. The following information was disclosed to you. Jet Spray has a managing director, Mr. Bond. Top drawer seems to be the target company that Jet Spray is acquiring. Top drawer is a design company. Jet Spray has employed Top drawer in terms of designing most of its models in recent years. Mr. Bond likes the advanced design materials and testing technology. Okay. Company A takes over Company B. What could be the potential issues? This is what we need to try and find out. The purchase price will need to be substantial to reflect Top Drawer's reputation. Well, okay. What's the reputation? What indicators are there that the reputation has not been damaged in any particular way? High level of profitability. Is that going to continue in the future? Remember that with the price of acquisition, that can be based on asset values, that could be based on earnings, future profitability, future turnover. So what impact could there be on the future profitability? Will it continue? So here, the clue is given to you by the examiner, any off-balance sheet matters and other factors. So each of these factors may well assist you in coming up with the matters for your report. Right, the shares held equally by its managing director and design director. The design director is acknowledged to be among the best boat designers in the country. So, in the takeover, two people are going to have to agree. They're held equally, you need both. One person disagrees, there is a problem. Does that mean that you're going to have to make the same offer to both directors? As the design director is acknowledged to be one of the best designers in the country, then maybe they will consider their intellectual value higher than the managing director. The MD may put the cash in, the design director puts the intellectual value in. So the impact on the structure of the offer is that you may well have to differentiate with the design director in some way. So the design director may be offered shares in terms of jet spray. The design director may be offered some form of future bonus, cash inducement. Because of the value that you are dealing with, because it's considered to be a high value, then you will need to consider the split in relation to shares, cash. How can that be? Wholly or partly shares? Maybe because there's difficulty in raising cash. Okay, R&D. The company capitalizes as research and development, direct costs and proportionate overheads on all design work not undertaken on the contract. So here you are looking at IS 38. Research should not be capitalized. However, what could be the potential impact on that of future research, of ongoing research? It may be necessary to consider what value the ongoing research might have. So whilst no specific value is paid because research is written off, then there may well be future consideration to be deferred and made contingent upon the new designs and the continued designs. So it's justified that almost all ideas are eventually incorporated into some final product. Fine, so is there some form of deferred element? Are you paying for what you hope to be happening, or can you defer and make contingent? So deferral and contingent payment is a common approach when you're looking at the purchase of due diligence of another business. Jet Spray is potentially thinking about buying Top Drawer. So what about the other clients of Top Drawer? Are they going to wish to continue to utilize the services of Top Drawer? That may be a question, especially if the other customers of Top Drawer happen to be competitors to Jet Spray. So is there a potential that some clients may well withdraw and cancel contracts? That will need to be considered, what the impact of that could be. There may well need to be some form of personal guarantees from the directors in relation to those contracts. Provisions. Investigation work in the causes of an accident in which one of the company's designs overturned during a race. Indications are that the cause was not a design fault. Okay, notice here that you are dealing with a provision that was made in March 2014. You are looking at a 2015 year end. So it does appear that expenditure to date has utilized most of this provision, and therefore it could be unlikely that future cash is going to be an outflow. However, if there was an accident, it was overturned during the race, what is going to be the potential legal situation on this? There may well be legal claims, outstanding legal claims. So basically, full investigation needs to be made on what the potential claims are, and those claims should be settled by the directors of Top Drawer and not Jet Spray. So those claims would need to be ring-fenced. That means that the directors of Top Drawer would take on the potential liabilities. That is very typical where we have mergers of major firms, for example, PwC and Tutors and Libran, one of the last major firms, and there would have been agreements that anything that hit that would have hit Tutors and Libran would not be met out of the pockets of the PwC or out of the pockets of the Pricewaterhouse partners, and vice versa. Right, I've mentioned that we are looking at other areas, skeletons in the cupboard. So, is there a image, reputation? Is there any particular reputation damage? Okay, this is going back to P1, the risk, but remember, reputational damage can be the biggest risk that a business has. So, is there going to be reputational damage to the designs because of this accident in terms of the overturning? It may well be that the consideration should be on an earn-out basis, such that future profits coming in, the consideration will then be released if those future profit targets have been achieved. Other factors that we would need to consider, let's just go back to the whiteboard on here. So this is question 2, part B, other factors. The examiner does tend to set this type of other factor question where it's out of the box thinking. You're going to have to deal with what you believe and understand from your own experience. So what about the directors of Top Drawer? Jet Spray is the one that's chasing. Do they really want in relation to Top Drawer? Synergy. Is there any opportunity to provide synergy in terms of reducing costs and therefore increasing the overall profitability? Maybe not, for the simple reason that one designs, the other builds. Not really similar, but there might be some synergy. What about culture? How are the two companies controlled? How are they directed? They both are similarly small, but because they are small and dependent on individuals, are the individuals, do they think the same? Is there a risk that some of the designers, some of the staff that's in relation to Top Drawer might leave because they don't like the culture of jet spray. Any other parties? Are we going to get into a competition if it becomes known that you are interested in taking over the top drawer? Then some of other top drawers clients may also come into the game because they do not want jet spray to obtain top drawer. So those are a number of ideas in terms of the factors that you would have to consider. There are 10 marks there, so we're looking at least 5 elements and expansion on those 5 elements. Right, I've been now going for over the hour, so do we have any questions? I cannot see any questions having come up. Are there any questions? I cannot see questions on my screen. Okay, on the basis that I cannot actually see questions. Right, section B, 2 questions to be attempted in section B. Choose them carefully. Spend a little time in terms of deciding what 2 you are going to do. You're not going to have the time to do 3. If you do 3, then that's indicating that you're either fantastically brilliant at auditing or you're hoping to maximize the marks. Yes, the marker will mark all 3 and give you the top 2 marks, but because you've utilized the time to do 3 questions, it basically means that you will not get good marks on any of them. And therefore you are likely to fail. So, section B, just running through in terms of what the choices are. We'll do this in the order, so I'll do 3, then 4, then 5. Identify and discuss ethical issues. Just a second, just trying to get my pen to write and move. Right, we are back. I had frozen up, but I seem to have got that sorted out. My stylus is now working. Right, identify, discuss, and. So if you identify it, maybe 1 mark. Discuss, at least 1 mark. Identify may only be half a mark. But the point here is, if you do not do both, then you're not going to get a good mark and you will probably fail. We're looking at ethical issues raised in relation to Aventura and recommend the actions to take. So here we have another and. Recommend the actions to be taken. As usual, the marks are allocated in terms of each section. So we can see here, item 1 is 7, item 2 is 7, item 3 is 6. In past exams, the examiner has indicated that ethical issues tend to be the favorite of candidates. Potentially, there's not much more to ethics from an F8 perspective, but you are at a P7 level. One thing you cannot do is to answer P7 questions from an F8 perspective. So the examiner is going to be looking for more in-depth consideration in relation to your answers. Failure to do that, you may not get the marks. So, and Ventura is a listed company. All right, we're dealing here with ethics, but before you start leaping off, look at what the particular requirements are. If it's a listed company, then there may be problems with other work, internal audit, for example. If it's a listed company, then you might be thinking partner rotation. But as I said, hold on. Let's just see what the various requirements are. Right, they produce and wholesale fashion clothes and audio video equipment. So it's a wide range, diverse company. It's audited by voice, and the audit manager is Darius Harkin. The following matters have arisen during the year end to the 31st of March, and it's nearing completion. Okay, so again, June exam, this is March, you are involved in the final element of what is happening. Right, item 1. During the annual fiscal counts at the company's principal warehouse, the audit staff attending were invited to purchase any item of clothing at 30% of their recommended dealing with a favoritism element, so there might be an interest element here that would need to be considered. But for 7 marks, you do have to say a little bit more than just that. So what do we pick up from here? I say we pick up that we've got a 70% discount. So we're looking at a significant amount. So unless the value is clearly trivial and inconsequential, accepting the goods can be a threat to objectivity. Explain why that could be a threat to objectivity. The audit staff should not just accept the audit, they should realize that this is a threat to their objectivity and should therefore contact the appropriate manager, the audit partner, to clear it. There should be a policy, and given the size of this, voiced should have a policy of not accepting any service or goods that's going to is going to impair objectivity. Most certainly, that 30% of the recommended retail price should be exactly the same. It should be no more generous than what can be offered to normal staff. It's going to depend on the nature and value of the goods. Extra P7 twist here is that the staff were invited whilst they were participating in the count. What the examiner is looking for here is that most certainly you would not want to take up the offer and remove goods from the count. that could become a material problem in relation to the physical quantity of the account and the subsequent valuation. Taking the goods away, you're involving in cut-off problems and movement that should be minimized. P7 thinking: what's going to happen in the future if such staff come back onto the audit where there is potential problems with the count? If it subsequently turns out that the count was not accurate, then there's a potential for accusations being made at the audit staff if they did accept that offer. Item 2. The chief executive of Ventura, Armando, owns a private jet. Amanda invoices the company on a monthly basis for the proportion of the operating cost which reflects business use. That's fair enough. One of the invoices shows that Darius Harkin, who is the audit manager, was flown to Florida and back 2 weeks later. Neither amateur or host have any offices or associates in Florida. Why Florida? Maybe you're thinking of Disneyland. Why January? You're thinking in terms of a New Year holiday. That's going to be the question mark. So here we're dealing with the offer of services and hospitality that Armando has invoiced Ventura for Darius's flight. So first thing that should be picked up, clearly this does not appear to be business related and therefore should not have been invoiced. So a question is going to be raised in terms of the integrity of Armando for invoicing the company for what appears to be a private journey by the audit manager. Is it going to be clearly not trivial, as this is going to be a return flight? Return flights on a commercial airline going to Florida would mean that it's clearly not going to be trivial, unlikely, especially as the indication could be that maybe he took his family. That's just a broad extrapolation that the family went. So what's happened to the potential ethical code in relationship to the company, the audit company voiced? It's fairly clear that the manager, Darius, should not have accepted the use of the jet without the permission of the audit partner. Again, under the circumstances, it is unlikely that such permission would have been given because of the potential price. Did Darius pay for the flights? Again, if Darius did pay for the flights, was it a commercial flight? Was it a commercial rate? And it raises the question that Armando should not have invoiced the company Ventura for reimbursement. If he did so, got the reimbursement, that is going to be fraud. The best thing that should have happened here is that Darius should have declined the offer of using the jet and should have flown to Florida using commercial airlines. This could create further problems if Darius actually used the jet without the knowledge of Voist. If Voist had agreed, then you are looking at a situation of the need for Voist to review their ethical procedures. If Voist did not know, then the judgment of Darius, the integrity of Darius must be called into question, and that would mean inquiry of Darius. How often has he used that jet? How has the use of the jet impaired his objectivity? Having discovered this information, it will be necessary to review Darius's work, certainly for the current year, and perhaps for previous years where there is evidence that the jet had been used for his private purpose. This is one point to remember that comes up a lot in these ethical style questions, where the integrity of a senior individual is called into question. Then it's essential that the working papers are reviewed. The review should be independent by a knowledgeable senior individual, not connected with the audit. Final point, his engagement to be married to his personal assistant, Kirsten. Kirsten had been Voist Audit Senior in charge of the audit of Adventura. She left and joined Adventura in August 2014. So in that context, that will be in the time frame of the current audit period. Okay, current year ended 31st of March 2015. Again, keep that in mind. Right. Look at this in two elements. Look at the current year's audit and the prior year audit. Again, it's coming back at P7. Look at both ends. Kirsten was the audit senior in charge of the audit of Adventura, indicating she would have been the audit senior in the previous year connected with that. So, what's going to be the impact on her judgment for the previous year? The objectivity of the prior year audit may have been impaired if Kirsten already had a personal relationship with Amanda, or she was aware that there was the probability of joining Adventura if she'd been made the offer while she was involved in the audit. In such circumstances, the work of the senior Kirsten would be reviewed for the prior year audit. It's important to establish what the relationship was, how long the relationship had been running, and was it possible that the prior year audit's work could have been impaired. As we're dealing with a March year end, and she joined in August, it's unlikely that she would have been involved perhaps in any of the interim audits, for example, for the current year. However, for the current year, if she did any particular planning exercise, if she was involved in any particular development of the audit for the current year, then the input to that must be reassessed. It's unlikely that her input would have resulted in any objectivity issues because of her position. The audit manager would have reviewed the input and the audit partner would have approved any particular audit plan, for example, the interim audit plan. The higher you go up the ladder of seniority in the audit firm and at the client, the greater the risk would be. If there is a risk, if it's been assessed as a potential risk, then any input into the audit before she left would have to be and should be reassessed. However, she's working at the client. Amanda is getting engaged to her. So what's going to be the impact in relation to the current audit for June for March, so say 2015? You become aware of this, you're doing the review, so there's potentially a significant risk that Kirstine may have been involved with the audit team in some way. As a former senior, she is likely to have actually known members of the audit team. What exactly is her role in the firm at Ventura? She's a personal assistant. Does she have any input into the preparation of the financial statements? If she did, that's going to increase the audit risk. However, it must be assumed that she may have discussed audit procedures with Amanda, or at least Amanda may well be aware of particular situation and particular audit techniques. As Kirstine had joined Ventura in August 2014, then the audit planning should have taken that into consideration. That the audit team should have been made perfectly aware of Kirstine's involvement, Kirstine's experience, and they should be on guard. Professional skepticism should be at a much higher level if they were to deal with Kirstine. As the engagement was actually announced a week ago, and this is after the completion of the audit, then it's essential that a complete and thorough independent review of the audit file is carried out. So that's what you're looking at, typical P7 here. Relate back to the potential impact on the work that's been carried out in the past, and then look at the various possibilities of Kirstine being involved in the current audit or advising Amanda on audit procedures for the current year. Question 4, Verdi. This is a typical style of question, the audit of financial statements, where you are required to comment on the matters you should consider and the audit evidence that you would expect to find in your review of the working papers and the financial statements. Question 1 was about the principal audit procedures, the planning, the work program. This question, which I said is very common style for the P7, is about the review elements. And there is a set pattern that you should consider when dealing with this. Let me just go to the whiteboard for this. First of all, you should consider, is it material? This is P7 materiality. So you need to be thinking about planning and performance materiality. You need to be thinking about the separate criteria for materiality. So this is just not 5% of the profits. You need to be thinking about net assets, gross assets, turnover, as well as profit before tax. You need to be thinking about 0.5 to 1%, 1 to 2%, 5 to 10%, depending on the specific elements. F8 style basically dealt with impact on the profits. P7 style can deal with the impact on everything. Where the examiner has given you figures such as in this, and qualitative materiality. Qualitative is going to be about disclosures. Make sure that in most circumstances you do consider the adequacy of disclosures, especially at P7, where you're dealing with a higher level IFRS from P2, which are primarily much more discursive and disclosure orientated rather than quantitative stated. So professional skepticism comes into play as well on this. So the first point is it material? Second point, what standards are involved? If you think about non-current assets, then you might just be thinking, hey, IAS 16. But, of course, it could be 17, leases, as it currently is. You could be dealing with loan interest, capitalization of loan interest. You could be dealing with provisions in terms of termination provisions, in terms of separable assets. You could be dealing with investment in non-current assets. Okay, so investment assets. So it's just not the odd one or two. And of course, if you're thinking of non-current assets, you're thinking of impairment. That's going to be important as well. Okay, so identify the IFRS, and with the IFRS, you will be able to give what the treatment should be. What do the directors do? What should they have done? Quite naturally, within the question, they will do what they should not have done. Otherwise, there's no point in having this particular question. So, is it material? What's the IFRS? What do the directors do? What should they have done? What assertions are at risk? Okay, in fact, the assertion should have been first, but okay, we've got it here. So materiality, IFRS, assertions at risk. What should the directors do? What did they do? What should they have done? And lastly, what's going to be the impact on the auditor's report? We'll come back to that auditor's report later. Impact on the auditor's report. That will be your plan to gain the maximum marks at this point. Right, let's go back to the mock. So, where's item A? We're given some figures in terms of the draft. 330, 228 for the previous, 15.9, 13.7. My apologies, 187 compared to 159. The following issues have arisen during the final audit and have been noted on a schedule of points for the attention of the manager. Right, advancement, technological process, look at that. You're thinking impairment. So, in this case, we've increased production in 3 of the 4 factories, but the remaining factory is now surplus. So that's where the specific impairment element is coming. On the 29th of March, the year end is 31st of March, so this occurred before the year end. Verdi contracted to sell the building for 11.5 million. The building was revalued in March 2012. Notice 2015, 2012, 3 years. That's a pretty long period. Sold it for 11.5 million. What's the profit? If the profit is material, that's going to indicate that the revaluation should have been taking place on a more regular basis. Okay, it's got a carrying amount of 9.2 million. Gives an indication that the gain on disposal is appropriate, is material. Gain on disposal has been credited to the revenue, and the balance of the revaluation surplus has been credited against other operating expenses in the profit and loss account. Okay, so is it going to be material? The gain of 2.3 is 0.7 of revenue to which it has been credited. That's what you've got to pick up. We've got to credit it here, so it does bring in a point of dealing with revenue. So it's material to revenue, 0.7%. Revenue is 0.5 to 1%, so it's going to be material. Looking at the gain in relation to the profits, then the gain is in the region of about 14.5%, so it is also going to be material. As both of these items are material, they should be separately disclosed within the statement of profit or loss and comprehensive income. If that has not been disclosed, then you're dealing with a material error. In relation to the profits, the revaluation surplus, the gain should be recognized within the profit and loss, but not classified as revenue. The revaluation surplus should be transferred through a retained earnings adjustment in terms of the reserves. So that is going to be material again. 3.7 million credited to the profit loss account is 23% of profit and is clearly material. the surplus is going to be 10.9% of profit, and again, it's going to be clearly material. If the sale has been contracted and it's on its way through, then you should be dealing with IFRS 5 in terms of disposal of the asset. If that's the case, it should not be depreciated. Coming back to the revaluation situation, what about all of the other buildings? Should be revalued on a regular basis. As this building was revalued on its disposal, then all of the other buildings in the same class of buildings should also be revalued. A fair assumption to split those 5 and 5. 5 marks plus 5 marks. Okay, so what audit evidence would you expect to see? Do not miss the easy marks. It's saying here that it was sold, so there would be a contract, contracted to sell the building, copy of the contract. So you want to be able to establish when the transfer took place. There was a revaluation. So you'd want to see the revaluation report, and that would be audited in terms of the potential selling price. You want to see that the sales proceeds have been received. You would also want to check that the detail in calculating out the profit and loss on disposal agrees to the prior year working papers and the non-current asset register, or as recorded within the general ledger. You would also want to have evidence of what the correct accounting treatment should be. Part B deals with a warranty provision. Scale of charges for equipment has increased, or was increased by 40%, with effect on the 1st of July. Remember what the year end is, it's the 31st of March. So we're dealing with 31st of March, April, May, June. 3 months difference. These increases take into account now given a warranty to reinstall any item which fails to perform to specification, a period up to 3 years. The notes disclose the following: detail of the equipment since the 1st of July. No provision has been recognised as the amount of the obligation cannot be measured with sufficient reliability. Installation fees amounted to 5.2 million, of which 1 million related to the 3 months from the beginning of the year to when the provision came in, the warranty came in. Okay, is it material? We're looking at 5.2, that's 1.6 of revenue, it's material. If 4.2 million, because 1 million relates to the 3 months to the 30th of June, then you are looking at 1.2% of revenue, which is still material. So either way, you're looking at something that is dealing with material. The company guarantees all installations. No provision has been recognized. That is a note. So that effectively permits that Verdi has legal obligations. So the standards that are going to be involved here will be IAS 37. Under IAS 37, it can be measured with sufficient reliability, and it is then determined, are we dealing here with provision or a contingent liability? What's going to be the probability of the outflow of resources? Looking at it as a group, as a whole, then there will be some outflow that may well need to be carried through and settled. So therefore, a best estimate will have to be made, should be made, and that would need to be disclosed. In this type of question, you are dealing here with sales of 5.2, 1 million relating to the 3 months. How much of that is going to relate to become material? Well, materiality in relation to the profit and loss account is looking at 5%. So reverse engineer to give an estimate of what the 5% of the profit is likely to be. So 5% is going to give you an 800,000 profit before tax. That is the borderline. So if more than 800,000 is paid out in warranties, then it's going to be material. So it will need to be placed in as a potential provision. Audit work. Details of the working. What installation has been made in the 9 months, the average age of an installation where there's been a defect, the number of defective installations so far, comparison with previous period, and what is going to be the expected cost of the reinstallation. All of that information should be placed on file and worked through. What's going to be the situation if the management do not make a provision based on the best estimate? Then that's going to be a qualified except for audit opinion in accordance with IAS 37. Note 5, question 5. Usually within P7, the last question is going to be relating to the audit report. Usually. That may not always be the case, but you should expect some form of audit opinion, audit report question in the exam. Comment on the limitations that shareholders may perceive that exist in the wording of a standard unmodified audit report forming opinion reporting on financial statements. Basically, in terms of dealing with this, there's a maximum of 5 marks there. In dealing with this, you could be looking at the expectations gap, not the expectations gap on the auditor's work, but the expectations gap on understanding what an audit report is. Now notice here, we have a caveat that it's other than institutional shareholders. So this is the ordinary shareholder on the street. institutional shareholders should have a good understanding of what finance is about. So that should not be too much of an issue. If we look at the ordinary shareholder, then you are dealing with jargon and knowledge of the audit process. Understand what the audit report contains, and you should then expand out. And as the new form of auditing standards, ISA 700, 701, 705, etc., have been issued, and there are examples of the new form of audit report that addresses certain of these issues, then that should also be mentioned within your answer. Prepare an answer for the finance director which critically appraises the form and content of the audit report. Fairly typical at this level. In this case, what you have got to ensure is that you fully understand what the content and detail of the audit report is. You need to understand that perhaps the report is referring to an emphasis of matter. You need to understand perhaps that the audit report has been modified when there was no need for it to be modified. And again, the best way of fully understanding these type of questions will be to ensure that you have worked through as many past questions as you possibly can. That brings me to the comment. That brings me to the end of the feedback in terms of analysing the mock exam. Let me just see what questions have come up. Is writing an IS number compulsory for this exam? No, it's not. Because in a practical world, if you cannot remember the ISA number, then you would look it up, reference it, search it. If you're not sure of the ISA number, do not try and quote it. Just state the general content of what you are dealing with. That's what the examiner is looking for. Which option is better for answering, bullet points or paragraphs? It's going to be a mix. You don't want bullet points in the sense of listing. You might bullet point the key paragraphs. The whole issue is that your answer is clear. You can use paragraphs or bullet points to distinguish the key elements. Certainly within our exam, bullet points happens to be our style. But most of these, you can see that potentially you may do away with the bullet points. Certainly it would help you if you, for example, look at the jet spray answer, because you've got two columns. initial conclusions, effect on the structure, and the bullet points help to identify if there's more than one effect on the structure. But again, work through past exam questions and look at the style of the examiner as to where you would and would not use the bullet points. Right, that brings to the end. No more questions? Nothing is coming through from the moderator. Okay, good. It's been broadly an hour just to finish off that particular section B. As we are now going to be moving in, let's go back to the PowerPoints. So we've looked at the mock exam debrief. The next thing to look at is going to be, are you properly prepared for P7? First of all, a little health warning I think everybody on P7 is fully aware of now, in that if you attempt to answer P7 from an F8 context, you will fail. Just a warning. So it's more than F8. It's the way you think and it's the way you deal with these problems. I often refer to as out-of-the-box thinking, in that if you're inside a box or you're inside the mug here, then you can touch the sides. You have a good idea. That's F8. Outside of the box, you can't touch the sides. The examiner will give you some ideas. They may point you in the right direction, but very often you don't have the comfort blanket of knowing the boundaries that you have to deal with. And it certainly helps if you love auditing, then it helps you to pass P7. If you're not an auditor, then I would ask, why are you doing this paper? It's designed for higher level qualification. So it's specifically designed for those who are going to be auditors. The second 50 is technique. Expand that out. You may have 100% full understanding of what all the rules and requirements are, but if you cannot communicate to the examiner, you will not pass, especially at this level. Remember, 1 is the loneliest number. This is someone on their own. You fill on your own. But the loneliest number for an ACCA candidate is not going to be 1. It's going to be 49. In fact, that will be 49% is the loneliest number. Why did you not get 50? Why 49? Well, that's down to poor exam technique. P7 is a hurdle paper. P7 is designed for candidates who are going to become registered auditors. They're going to sign off audit reports, and therefore it's moderated to a certain degree by independent external bodies. So it is of a particularly high standard. To make sure that you get more than 50, then 1, be properly prepared, know your examiner, make the marker like you. If you can achieve that, and you get more than 50, then you will have tears and laughter of joy. If you get 49, 48, 47, marginal foul, then your tears are going to be of sorrow. Where were the extra marks? If you end up with 20, 25, then okay, it should be fairly clear. That's a technical issue. Borderline is a technique communication issue. So, first of all, study all of the sessions. Don't try and miss anything out. Absolutely essential that you fully understand everything. So you should be okay in terms of planning and risk, ethics and various professional issues. And by professional issues, that could be about indemnity insurance, for example. Okay, it could be about staffing. It could be about laws and regulations. Practice and management is often part of that core area. Gathering evidence. What principal audit evidence do I need? Question 1. Reporting and close down, not only is that going to be about going concern and subsequent events, for example, and other information, but it's also going to be about review of audit working papers, the question that we had in the mock exam. What evidence would you expect to see on file? Whatever document the examiner gives you within the scenario, perhaps it's a press report. That should be on the file. Then you're dealing with fraud, laws, regulations, money laundering. Money laundering is an interesting one because in one particular jurisdiction I'm very familiar with, students did very badly. This is going back about 10 years, but candidates did very badly in a particular question. And when the examiner held a meeting in the capital city of that particular jurisdiction, and she asked the candidates, why did you do so badly in this particular question on money laundering? And the reply came back, well, that's the way we do business here. They did not recognize the clues given within the scenario. Never, for me, with my students when I'm teaching, I always say, I don't care what you do here, it's what you should do that's ethically correct as far as the ACCA is concerned. That's going to be the key point in terms of things like money laundering. But again, practice many past questions. Current issues. Well, we'll have a look at current issues later, but they do cause problems. To become properly prepared, you must attempt all questions under exam conditions. You're not going to find the answer in the exam. That's the whole point. You give the answer to the examiner. So if you're using study question banks, don't look at the answer until you've completed the question, doing it as if it's in a real exam. You've just done a mock exam, most of you, I hope. Depending on your providers, then you'll have monitoring tests, practice tests. If you're with Becker, then you'll find a another mock on our website. Then, of course, you should also remember that you have the specimen paper. You can practice that as a mock exam. And you've got all of the past exam papers on the ACCA resources for P7. So you can take a couple of those and practice those under correct exam conditions. Absolutely essential. You know the time, you know what you've got to plan, you know how much time it's going to take, how much time you're going to have to prepare your answer. Essential that you do it. Read and understand the examiner's articles and the support that's there with the ACCA. There's lots of support in terms of the ACCA. We have our own support. Becca will have student hotlines, question lines, webinars, forums, etc. Other providers do similar things. But it's there for a purpose to help you if you have a problem in terms of using the resources. But the key resources that must be practiced relate to examiners' articles, look at those in a minute, and examiners' reports. Because the P7 pass rate is dismal, it's scary. Because P7 is basically aimed at people who wish to become auditors. Yet the P7 pass rate is 30-35. So that means that maybe 65% of auditors can spell audit, but they cannot audit. Okay, that's a fairly wide interpretation, but it is worrying to a certain degree. So of the resources, make sure you read all the relevant articles, and the articles, well, here's one. This is directly off the ACCA P7 resources, and it's about professional skepticism. That came on a couple of months ago, so surprise, surprise, you're going to have a question around professional skepticism. I was asked a question on our forum. What type of questions could be asked? What's the style of the question? Well, the first one could be, what is professional skepticism? Then there might be a question on how the auditor applies professional skepticism. Then there may be elements of a question around the specific application of professional skepticism. Read the article. In your study system, look at the current issues. What information will your study system give you about professional skepticism? In particular, for example, look at the Q&A from the IAASB. Go to the IAASB, search on professional skepticism. The other article is going to be around audit quality, quality control. Read that article. Again, what recent developments are there in relation to quality control? That could be the basis of a question. Why is audit quality a concern? Now, you can see here that reference is made to the FRC and the audit quality inspections, the 2011-2012 annual report. What's the examiner talking about? If you've read this article, and you have not researched what this means, and you use it and put it into your answer out of context, you're not going to get the marks. You're not being that professional. You're not demonstrating the P7 level that is required in terms of being a profession, or at least being a professional. Okay, there's a conclusion. Some of these items have been referred to. So, just go back to the PowerPoints. We're looking here at current issues. Let's take this one stage further in the use of www, and let's Google. Let's bring this up. There we go. If you haven't seen this, hopefully, there we are. It's on screen now. I can see it, so hopefully you guys can see it. But this is the FRC website, Financial Reporting Council, the UK's independent regulator, as it says in the center of the screen. Okay, what information do you want from this? Well, let's click on Audit and Assurance. Professional oversight, professional discipline, audit and assurance, audit choice. Publications, let's just go back to our work. Codes and standards, conduct, audit quality review, okay, there we are. So in the FRC, conduct, audit quality review. This will give you the review reports from the FRC on the auditors who audit listed companies within the UK. If we have a look, okay, the report referred to 2011-2012, so let's just have a look at that. But you can utilize a more modern, more up-to-date one. Let's wait for this to come on board. It's a little slow at the moment. Here we go. Right, you should be able to see that. Read through the contents, key messages, differences in terms of what goes on. And hey, look, professional skepticism, group audit planning, auditor independence. It's pretty clear with those two articles that come up, something is going to come up. So dive into this type of review, download onto your PDAs, download onto your tablets, download the PDFs that relate to the reports, and read them through on a regular basis between now and the exam. The annual report for 2013-14 talks about letterbox companies. If you've no idea what I'm talking about, I leave it to you to try and sort out. Okay, that's dealing with the FRC, Financial Reporting Council. If I have a look at what else do I have in resources, then I have a global survey of inspections. Let's have a look at that one. It's not come up on the first page, but let me just take you to the first page. Right, the International Forum of Independent Audit Regulators, 2014 survey of inspection findings. Good overall summary of the IFAC independent regulators around the globe in terms of what they find auditors go crazy on the audit of listed companies. Just to give you a very brief overview of this, you've got that on the screen there. It's got, you'll have that on the recording that will come. Here's a quick summary of the typical type of problems did not pick up. 14% analytical procedures, substantive analytical procedures were done inappropriately. Some interesting numbers coming up. Okay. So that's just looking at, as I said, resources that have been mentioned in the on the ACCA website by the examiner in her articles. Research and read around them. Be aware of current issues. Come back to current issues later on. Right, specific problems then. Read and understand the examiner's articles and support and her examiner's report. This is a summary of the general comments that come from the examiner's report. Students do not read the question and the scenario. They do not understand the requirements. They do not answer the question set. In fact, they answer a question that was maybe asked 2 or 3 or 4 or 5 years ago. They don't fully understand the scenarios. They don't analyze the scenarios. They don't fully understand what the subject matter is about, going concerns, subsequent events, due diligence. And far too many students are still stuck in the F8 mentality. They're still within the box. P7 is outside of the box. Candidates cannot analyze, interpret, extrapolate the scenario. This is P7. Is at a high level. You're the partner, you're the manager, you're going to be advising the client. So you have to put your argument together at a professional level. This is communication, communication to the marker. If you cannot make your answer logical, you are going to have P7 covers all of the IFRS out of P2. It's also going to cover all ISAs, yet there is significant accounting problems. The candidates of P7 do not get the double entry element correct. Current developments. general lack of awareness of what is a current development. I've got some sympathy with that, for the simple reason that some of the issues that are current were issues in my day when I passed the auditing side of things. So they've always been current. Auditors' reports have always been a current issue, although recently they've taken a significant leap forward. More on that later. But professional skepticism, quality control. Okay, I won't say you've been warned, but the detail is there. Comments, you're a partner, so you will be expected to respond in a professional commercial manner, showing a lack of commercial awareness and practice management awareness. Basically coming up with suggestions that will cost $1 million to save $100,000. That sort of approach. Candidates cannot relate to the question set. In an ideal world, it should only be auditors that are taking P7. But the world is very often not ideal. And in some cases, many parts of the world, students are taking ACCA before they join a professional firm. That's going to be the difficult one. That is where the candidates, you guys maybe, are going to have to analyze past exam questions, use your study buddies, use your provider's resources to fully understand what is happening. Talk to each other, use Facebook. I'm not a fan of Facebook, I must admit, but it has its uses. So talk to other people about particular questions. P7 is not F8, it's not autopilot, but many examples, in many cases, candidates see a word like going concern and they're off. Or they see a requirement dealing with business risk. So they write absolutely everything, Wikipedia style, they know about business risk and probably end up by getting 0. One key element to pick up on P7 is add value. Don't just copy facts in from a question without adding value. Adding value is going to get you the marks. Anything else is a waste of time and you could lose. You could become a 49er instead of getting that 50. Some parts of the world, students have photographic memories. They're very good at memorizing questions and answers. So when they see a question comes up that looks similar, then it's like automatic cut and paste in a word scenario. So they just repeat the answer from a previous question. Markers recognize this. Okay, one of my colleagues is a P7 marker. And he basically says, yeah, this does happen. That students will, word for word, from a past question. And they often fail because it's not relevant to the question. Completing each question, failing to complete the paper, that is unacceptable at this level. Attempt all the parts, say something. That could get you the 50 instead of the 49. Current issues. Well, we've looked at professional skepticism, dealt with that with you, so that's okay. We looked at quality control. That's okay. So what about auditors' reports? This is an interesting one. A past question came up, I think, 2 sessions ago, was based on an article written by the examiner around the use of an auditor's report. and the idea, the potential discussion document, that high-risk areas should be discussed within the auditor's report, such as going concern. You must do that question, work it through, look at it. That's essential. However, as it's been examined, it's now open session, open season, on being something similar being examined. So, if you're not familiar with what I'm talking about, then have a look at this. This is the Independent Auditor's Report on Rolls-Royce International Company. This is Rolls-Royce engine manufacturers, aero engine, not the car. For 1 year. The IAASB, they've now issued updated ISA 700 series, but they're not yet coming in. They're not yet examinable because of the issue dates. Okay, that's going to come in a couple of sessions' time, but it's been examined. And if a question comes up about discussing the good and the bad aspects of audit reports, the best way is to look. You can see straight away here, our opinion is at the beginning, not the end. Our assessment of risks, what on earth is that? Well, that's the way the ISAs have gone. And you can see here, you've got detail of what the risk is, what the auditor's response was, and what their findings were. It's critical that you do read real live issues on this. Absolutely critical. Okay, that's the Rolls-Royce Auditor's Report. And if I just show you this one, then this is again the FRC Extended Auditor's Reports, a year's experience. So that lays down what has happened in the UK on the concept of the Extended Auditor's Report, the new form audit report. Gone are the days of boilerplating. Gone are the days of just replacing a client's name and the audit report says exactly the same. Each audit report for listed companies, each audit report on a listed company is now unique to that particular company. It's taken those decades to get this far, but we are finally meeting the expectations gap of the users of financial statements. Okay, back to the PowerPoints. So that's dealing with current issues, auditors' reports. Last point in terms of looking at are you properly prepared, just make sure that the examiner knows that you know. The examiner knows the answer, you hopefully know the answer, but you have to communicate to the market, to the examiner, that you know. Understand the examiner, getting inside their mind. The examiner, know your examiner. How do you know your examiner? This is not a personal question. It's not having a selfie taken with the examiner. You probably don't know who the examiner is. They're no longer mentioned by name. But understanding the examiner is what we've covered already. Read the examiner's reports. Analyze each question that you do back to the examiner's report. Analyze the examiner's answers. Do mock exams, work through past questions. Analyze the requirements of the examiner. Look at how they allocate the mark. Look at what they mean by explain. Look at the way they have picked up the clues, or at least expanded on the scenario. Understand what is out of the box thinking. This is your extrapolation, analyzing, interpretation. The only way you're going to do that is that you work through as many past exam questions as possible. They do repeat the style of the question. The scenario is going to be different. But if you understand and you think like the examiner and you have written your test answers like the examiner, then the marker will absolutely like you. Make the marker like you. How can you do that? Well, first of all, there's indications that you have actually thought the answer plan. The answer plan can be a spider diagram, it can be brief notes, ideas as they come to mind. As you are dealing with this, it may be notes jotted down on the question, but transfer them to your answer. Just each question on a new page, at the top, part A, plan, think, think, then do. Give the answer. It's also critical because if you put things down, you can then collate and collect and put them together. That will then enable you to give a much more professional answer rather than just random thoughts crossing out, etc. That's going to enable you to have a structured answer. It is expected at this level. Okay, you get professional marks in question 1 for that, but that could make the difference between 49 and 50 for the other questions. Don't just do it on question 1, do it on all of these questions. Have you put the appropriate facts in? I said earlier that you will have to add value. Information not just repeated, you'll get 0. The P7 examiners made that perfectly clear. If you just repeat things without adding value, you'll get 0. Content is relevant to the requirements. Inferences have been made, extrapolations have been made. This is outside of the box thinking. If this happens, we need to do this. If that happens, we need to do something else. Okay, so you must extrapolate. You must show commercial awareness. You must show professional commentary. Okay, all these are often referred to as higher level skills. In a minute, here we go, the higher level skills. Do you understand what's required? Well, the marker gets that idea from your answers. Can you take the theory and apply that theory into the scenario? Distinctions, inferences, comprehension, interpretation, professional commentary. and an appreciation of the fast-moving developments in audit and assurance practices. These are the areas and the things and the marking guidelines the marker is looking for to say, yes, this person deserves to pass. This is a professional paper. You cannot say to the marker, please pass me. But you can say to the marker, please pass me, by showing the marker these high-level skills. I quite like the last one about the fast-moving development in audit and assurance practices. I've been involved in audit over a number of decades, and at long last, we've got to an audit report that is actually adding value and saying something for the users of the financial statement. Amazing. It's taken that length of time, but we have argument, you'll get marks. If you say something that is completely and utterly rubbish, you won't get marks. I think that's fair enough. Okay. Are there any questions? Any questions from anybody? It was, should the plan of every answer be made visible to the examiner, then the answer to that, I think, is yes. Yeah, show the examiner what you are thinking about. You're being professional. That can make the marker happy. I'm not saying that the marker, if you're on 49, the marker will give you the 50 to get you through, but what I am saying is that if you're on 49 and the marker can see that you deserve to pass, that extra mark will be found within the detail. It will be there. Clearly, if your marks are 35 or 40 on the marking, you're not going to get the extra 10. Clearly, if you're 60, 70, 80%, congratulations, you've done extremely well. But it's the 49ers, it's the borderline, that this makes a huge difference. It's about being professional. This is professional level paper. Do we have any more questions coming up? The last question was about bullet points. Gone through that one. Okay, if there are no more questions, there are no more questions. We can move on, but by all means, put them up as we progress through. Right. Pre-exam preparation. What I call hitting the panic button. Simple. Plan ahead. Don't get into a situation where it's the evening before and then you're looking at some kind of summary. You're learning from the summary. You need to reduce the risk of not passing P7 to the absolute minimum that you don't need luck. So you are properly prepared. You've gone through all the study system. You've worked your way through all of the questions. You've done additional research. You've looked at auditors' reports, etc. You've looked through the FRC's website on auditing. Right. But what if you are hitting the panic button? Well, okay, you did the mock this morning, analyze it, go through it, compare it to the suggested solution, identify your weaknesses. Never mind your strengths. What you know, you know. It's what you don't know that you should be concerned about. And that's from a quantitative and qualitative exam technique approach as well. So analyze the mock exam. For technical, you're looking at a technical gap analysis. What did you not fully understand? In which case, go back to the study system, go back to your research, and look and search it through to find out what has been done wrong. Deal with it. Work through as many mock exams as possible. Already indicated that you've got mock exams available to you, hopefully with your provider, and you've got the example paper as well in terms of the mock exam. So just work through as many mock exams as you can under exam conditions and analyze. The more you practice, the more you review, the quicker you will be and the more efficient and effective you will be on the real exam. Okay. Right. Let's just pick up on some of the questions that have come in. Please explain the difference between audit procedures and audit evidence. Well, the audit procedure gets you the audit evidence. The audit evidence comes from the audit procedure. For example, always relate every procedure to an assertion. The evidence should be building up an assertion. The procedures will be the work program that's been devised from the audit strategy. So a procedure could be to inspect a non-current asset for existence. The evidence is that you go and inspect. If you hear this, you go and kick the non-current asset. It exists. That will give you the evidence. The procedure could be making inquiry because you want evidence that will support or dispute assertions made by a director. Professional skepticism is a form of a procedure, but that will give you evidence such that you may not believe the director's assertion. Which, whilst we're talking about that, at this level, the more subjective the matter, the greater the need for professional skepticism, the greater the need for solid supporting audit evidence. Okay, I hope that explains that bit between the procedure and the evidence. Please explain prospective financial information audit evidence. Okay, the starting point with that is you need to understand how the directors, how the manager produce the prospective financial information. You need to understand the procedures they will carry out. You need to understand the controls that are utilized. You need to understand where does the information come from. You need to understand their assumptions in producing the prospective financial information. When you've got that detail, then you can carry out the appropriate procedures to ascertain whether or not the prospective financial information is reasonable. Now, I said reasonable, but I will say that guardedly, because prospective financial information is in the future. Therefore, you cannot give reasonable assurance. Let's take the cash flow, for example. You cannot say that the cash flow will produce a balance of X in 12 months' time, but you can get evidence auditing the cash flow 3 months after it was produced, so you can audit those 3 months to see whether or not the cash flow is, excuse me, you can see whether or not, so I've got the sunshine coming through here and that's just made me sneeze. Right, okay, you can get the evidence as to whether or not the projection is optimistic or pessimistic. Other audit evidence could be understanding, I said about the control environment, what controls are in place, where does the information come from, what's a reliable source for that information, how much of it is estimates, perhaps a lot of it will be estimates, but what about the control environment? Why is the PFI being produced? What information is being produced? What is that being used for? What's the risk that the PFI itself may be falsified in some way? Those are the elements that you would need to think about in terms of getting the audit evidence. Remember, with prospective financial information, that's exactly what it is. It's prospective. It's in the future. It's not historic. So it could well be of a review nature. And if you look at review nature, then you know, for example, if you're dealing with interim financial statements, then if you're dealing with reviews, then you're dealing with inquiries and detailed analytical review. The next question. Is it appropriate to start audit evidence from calculation performed by management? Okay, again, typical point on P7. Whatever comes up, understand the system, understand the criteria, understand what management are doing, how they produce that particular estimate, for example. Okay, are you looking at something that could be overstated, or are you looking at something that could be understated? If you're looking at provisions, estimates in relation to provision, if you're looking at an estimate of the fair value of a liability, then usually the auditor would also produce their own estimate, their own model. They may not use the management's model. They will have to assess how reasonable that model is. They have to make a decision. Are we going to develop our own model, fair value model, and compare that with the management's results? Can we rely on the management's result? So that's a fairly standard approach. The more subjective the management calculation is, the greater the need for professional skepticism, the greater the need to challenge management. This is one point that if you read through those FRC reports, and this could easily come up in your exam given the articles from the examiner, if this comes up in your exam, then the more skeptical, the more subjective the estimate is, the greater the need for the auditor to challenge. And that can only be challenged by understanding what the management have done and developing your own independent approach to see if the management's approach is reasonable and the management's results compare with yours. That's one thing the FRC has picked up on, that auditors do not sufficiently challenge directors, especially over fair value on assets and on liabilities. What's the next question? How to answer the question of integrated reporting. Remember, with integrated reporting, it's not actually a report. There's no assurance report on the integrated report at the moment. Okay, the auditor's report will be on the financial elements, and there could well be an assurance report, say on sustainability. But at the moment, there's not a specific report on integrated report. That will come in the future. That's on its way, maybe, I don't know, 5–10 years' time. There'll just be one report that covers the entire integrated report. Just remember, the concept of integrated reporting is leading you to think of integrated thinking. It's leading you to think of dealing with the various capitals, for example. It's leading you to think of dealing with performance indicators. So you can have a performance audit, and you can have an audit of performance information. Make sure you understand the difference between those two. The audit of performance information is auditing like key performance indicators. So with key performance indicators, think, what are they? What's the definition? Why are they there? How are they prepared? What's its purpose in life? Where does the information come from? What controls produce that information? Can I rely on the controls? Do I need to test those controls? Can I rely on the information it's produced? Then when I've got my performance indicators, does it rely on information produced in accordance with the financial statements? If it does it make sense with the financial statements? Can I reconcile those performance indicators to the financial statements? In some cases, the performance indicator may be very qualitative rather than quantitative. So I need to use my knowledge and understanding of the business as a whole. If I'm looking at a performance audit, then I'm looking at the system itself. And usually that's going to be tied up with public elements, value for money, for example. Okay, do we have any further questions? Because we're coming towards the end of the allotted time. On that. In fact, let me just, if I dare, I don't think I've got it, it's not in the articles, it's not in resources. But you have mentioned about integrated reporting, so in the time I have, if I can change this system. Now I'm having problems with my system here. Just 1 second. Let me just close that. Let me open up this. You may see some strange things coming up on the screen. Ignore this for the time being, because I want to get Okay, go onto the web, browse Transnet integrated reporting, and it's a very good example of what an integrated report is about. So we've got financial capital, manufacturing capital, human capital. So if we look at human capital, for example, there's 54,671 headcount. How can you audit that? Well, okay, you're going to have to go to human resources, for example. Training spend of 621 Rand. This is a South African company. South Africa has been, for the last 2 or 3 years, has been producing integrated reports. How could you audit that, 621? How can you audit 100 million in R&D? How can you deal with customers, employees? What particular employee key performance indicators are there? How can you audit on a natural capital that Transnet consumed 256 million litres of diesel? So these are the sorts of things that a integrated report audit would be about, the approach, but it's a very good idea to be actually able to see, is the remaining of it, it's a very good idea to actually be able to see what an integrated report looks like. If you browse and you do a quick integrated report examples, then that will take you to the integrated reporting website, or just do Transnet integrated reporting. You have one that's one of the best, one of the better ones. Okay, let's see if we can come back. Aha, it did it then. Right, let's go File, and we want to go to Open. Here we go. Whoop, back. Go to File. Let's pick up on the P7, the master file, that's where I am. Fine, let's go back to PowerPoints, hitting the panic button. Any more questions talking about panic button? There's a question here that says same way to tackle. I'm not quite sure what matters to consider and procedures, are they the same? No, they're not. A matter to consider would be to consider whether or not a debt is collected, to consider whether or not a provision has to be made because the company is being sued. The procedures would relate to the audit procedures to be carried out to enable you to reach a conclusion about that particular matter. I think that's what the same way tackles. Right, what would be the difference in an audit report of forensic assignment from normal audit report? Right, the first thing to pick up on that question is forensic audits do not have audit reports. Don't use audit report as a generic phrase. It's completely the same. Okay, there's an audit report and an audit report. That's it. Don't use audit for any other form of report. The forensic assignment is of the nature of an agreed upon procedure. You agree to investigate the fraud, you agree to identify the damage of the fraud, you agree to identify how the fraud was carried out. You agree to provide recommendations that would need to be implemented to prevent similar frauds occurring in the future. You agree to try and identify who the perpetrator of the fraud would be or is. So forensic is about stating facts. Okay, it's a form of agreed upon procedure. Just to clarify that before we wrap up, there's no more questions coming through. Okay, so the audit report gives an opinion. The forensic assignment states the facts, but they are broadly similar in the approach of stating the scope of the work, the responsibilities of the management, the responsibilities of the professional accountant. They also have to state under what circumstances, under what standards they carry out the work. Okay, so that part of the report is fairly consistent. It's the end result. You're not giving a true and fair view, you're stating facts. If there are no more questions, let's just roll on. There we are. That's me at the end of all of this. Okay, I don't think there are any more questions coming up. So, on the basis that the ACCA guys are listening to this, I'd like to hand you back to the ACCA. I said earlier that perhaps it's traditional to say good luck at this level, but reduce your luck to an absolute minimum. You should not need luck. You should be well prepared. Okay. Back to the ACCA.